Hello and welcome to Weekend Markets, aka the weekly rant. But I promise not to rant this week at all, despite many reasons for doing so. I'm here with Steve Deacon, who is head honcho at Biztech Academy. How are you today, Steve?
I'm good, Zach. Yes, I expected there'd be some sort of rant today. I'm going to hold back and just listen, I think, today.
Well, no, I think the thing that many people don't realize on social media and everywhere else is that you can complain all you like, but actually it doesn't actually do any good at all. And in fact, part of the role of social media is actually to dissipate all the dissenters, all the people who don't like the government and this and that, the way things are. So it's actually a very good mechanism for being ignored. So you might as well just shout out the window or something like that. Absolutely makes absolutely no difference at all. But no, I was just talking to you offline about the autumn statement from my friends in the Conservative Party. And
think of the reduction in national insurance, Zach. Think of all that money you're going to save with less national insurance.
I think that was it 2% or something like that.
Something like that, yeah.
Yeah, no, I tell people I gave up a job as soon as I saw what when it was PAYE and it was the national insurance was X, and I just thought it's basically 50-50 between me and the government. If you include my travel and expenses and getting a sandwich at lunch, so what's the point? And so that is an issue. But luckily, the economy seems to be doing okay even despite that. And I suppose more pertinent to our conversation, the FTSE this week has been steady, which I suppose is a victory.
They're very flat. Yeah.
What's your
very flat
moment?
Sorry, I missed that. You're saying what's maybe so very flat. I saw that, and of course it's a quiet week, right, in the US with Thanksgiving and all that. I think the markets are open a little bit half day or something today, but I'm sure there'll be not a lot of work being done today after the deep fried turkey that'll have been consumed yesterday. But yeah, I saw all of the indices right were flat. I see the pound's gone up a little bit. Sort of, it's over the 125 mark now against dollar cable which is obviously a good thing.
It went up presumably because the FX markets realised that Jeremy Hunt didn't do anything. So it was basically if it was a giveaway, then the pound would have gone down like it did with poor old Liz Truss. And obviously, as it was taking taxes to the highest since the Second World War, which is what's still happening, then obviously the pound goes up. So that's the state we're in at the moment.
Yeah, I think. I mean, as we said last week, I also think that this is, for me anyway, this is a continuing trend going forward. Now, the dollar's gone down. It's not just, I know the pound was gone up against the dollar, but the dollar, generally through the DXY has gone down in the last week as well as it has done in the previous weeks. I think it's under 104 now, 103.7 or something like that. Gold gone up slightly. I see your favorite precious metal did break the 2,000 mark again, but guess what? It came back down.
Is it below 2,000 again?
Yeah, I've only looked at it about an hour ago, and it was 1,993 or something or other.
Well, yes, I think because the standing rule for the last since the GFC has been that whoever runs COMEX will sell a shed load of gold futures to make sure that it doesn't go over or stay over 8,000. It's basically pegged against the dollar to preserve the dollar.
You mean the gold standard almost?
Yes, gold standard. It's a very good one, actually.
I'm also starting to have my doubts, Mr. Mir, about Bitcoin and 43 at the end of the month. But I guess we've still got a bit of time to go. But
the night is young.
I had a long think about this the last couple of days. Someone's been sort of pestering, but they haven't been pestering me. That's wrong to say. They've been talking to me about GST again, and I think it's QBT is another one that's playing around with blockchain, and the fact that the crypto world is now anticipating the bull run in 2024 and 2025 is going to go down again, and and I've sort of watched and been part of the crypto world for a number of years now, and we hear this every time about 6 months prior to halving, right? And we shall see this time. I think people are tending to forget though that each time there is a halving, the impact of the halving is less. I think it's half of half, right, of what it is. So that whether we get such a big bull run this time, I guess we'll see. I still think it depends on the ETF sort of stories and how that goes. But if we don't get any real updates in the next 2 or 3 weeks, or certainly into the Christmas time about the ETF. I'm not sure that it'll break 40 over Christmas, but we'll see. We'll see what happens.
Well, I think it's probably done rather better than most were expecting. So I think that's the takeaway. And obviously, you have these periodic Binance type disasters, or the other thing which I've already forgotten the name of, which was a fraud, etc.
FTX.
So all those things. So I think it's bearing in mind that it's probably it's fiddle less than gold, which I suppose is not saying much. But the headwinds that periodically come against it, in the sense that the authorities don't want there to be an alternative to fiat currency, and because obviously that would be the end of the world. And so it's the cryptos are left alone if they're not doing very well or doing badly. But if they start doing well, then they get the slap. A bit like some small caps, actually. There was a company this week, which I don't know if you noticed, Wildcat, where the shares went up 50% on, I don't know, Tuesday or Wednesday. And obviously then they had to issue a speeding ticket RNS. It's like if the shares plummet, then nothing happens at all. Or if they're just going down, nothing, you don't have to say anything. But if they go up, then you have to say why they may have gone up.
Calm it down.
And so it's as if we've got such a problem with shares soaring at the moment that people might start making money, or there might be some fraud or insider trading associated with all that. I think it is something that people say, there's a lot of pumping of stock, and there's all this hyping and all this other stuff like that. And my answer to that, which I want to get on the record here, because obviously this is a rant program, is that if pumping worked and ramping worked, then every stock would eventually get into the FTSE 100.
Indeed, and we'd all be wealthy people, right? Ultimately, because we catch the train of one of them at least.
Yes, it only tends to work. If it's going to work at all, it might work for a short period. But you need to find the stocks which have that almost sort of imperceptible strength and rallies, and that they outperformers, which
the fundamentals, right?
Mostly you don't see. By definition, you won't see those, because if they rose too fast, then they would get overpriced, etc., etc. So it is interesting. But I just thought that the speeding ticket on Wildcat was just typical of a market which is just. The playing field is totally against the punter. It's totally against entrepreneurship, and it's totally against, actually the point of the stock market in the first place. And I noticed that Jeremy I didn't see any big initiatives that Jeremy was going to come up with, getting rid of stamp duty or lowering capital gains tax or whatever. I don't think there was anything at all.
I thought that because when we spoke last week, you talked about those couple of beers you'd had with Rishi. So I thought you'd have put a quiet word in his ear and sort of given Jeremy the guidance.
Well, apart from the fact he doesn't want to talk to me, the other point is he doesn't actually drink, so it's a bit of a and also he might think that I was somebody who might be wanting to take his position as well, which is absolutely true.
Yes, I can see.
So I am taller than him and more human, so it might be a vote winner. You never know.
Intimidation, right? I was intrigued, just talking about your speeding ticket analogy and so on. Almost completely the other side of the coin, if you like, was Hummingbird Resources. You had a discussion this week with Dan Betts, the CEO there, and I saw the one. I think it was maybe a month or so, or maybe 6 weeks or so ago, that you did prior to that, and I am really intrigued. I follow Hum quite closely, and yes, of course, I don't know whether Dan is just hot air or what he's saying is true, but he certainly comes over very sincere and very, very humble, and certainly a very professional individual. And this seems to be
wasn't that me you were talking about, not him?
Maybe I was just paraphrasing you. I did watch it about an hour ago, so that might be the reason.
All right, I think that that is actually. I think I said it, or I asked about it in the interview, that you've got so many companies which are just a map with a sort of a pink or a blue shaded area, saying this is where we'll find the gold. And he's firing on at least two cylinders in terms of production, and he's actually producing. How many mining companies or resources companies on the London market who are supposed to be resources companies are actually producing?
Well, I was going to say you call him a mining
Percentage.
company, and you're quite right to call him a mining company. But the reality is he's a producer. I mean, the Yanfalila mine this year, I think, is going to produce 80 plus, maybe even 90 thousand. I was going to say tons, but obviously it's not tons, ounces of gold. And as he says, if Barossa comes up to patch and whether it's the end of this year or whether it's the end of February, it will happen. And from there, 2024 could be 200,000 ounces, and that's compared to what the market cap is now. That's a great opportunity for people, in my view.
Yeah, but as you say, it's a producing company, and people seem to be less enthusiastic about a producing company than they are about many. We're going to be producing in 2026 or 2028. Oh, fantastic! You've got a market cap of 200 million. It's well, not that there are not that many of those around.
And it may be because, and again, I'm thinking aloud here, but it may be because the retail investor, the mentality of the average retail investor is, I want to see, multi-bag or whatever the phrase is that's going around at the moment, and therefore to see something that is, I think the phrase you use, is either drilling in the ground or thinking about drilling in the ground, right? When they're at that status, and you think, well, actually, they're only got a market cap of, I don't know, 20 million or 10 million or something, then yes, they could potentially go up to 80 or 90 million. But these guys have got a market cap. I think I can't remember. I did look at it earlier on what the hum is, but it's not a big number. And if they all of a sudden get to 400, I think he said $400 million, right, in his interview with you as potential revenue next year, then you've only got to multiply that by 3 or 4 times as a multiplier for a valuation of a mining company, and you've got one hell of a valuation of something. And talk about multi-bagging, that will go if that really is correct, if that happens, and Dan delivers as he said he's going to deliver.
Yeah, I think the other
interesting times for Hum.
Yeah, the market, I suppose, because we're in a liquidity crunch, the market is actually just looking at the debt pile and the ability to pay off that debt.
Yeah, no, for sure.
And the speed at which they'll do that. But at the same time, because of that, if the debt wasn't there, obviously the shares would be through the roof compared to it'd be a pound a share, not 10p. But the run up to that is, I think, I'm just looking it up now, the Lassonde curve, which is the mining life cycle situation, and I think that you have the initial enthusiasm, and then the shares come back. I think we're at that sort of the dip before the second big run, and because that is the life cycle of a mining company. I mean, that's what happens. You find the prospect, you raise the funds, and then as you produce, you pay off the debt. I mean, that's the normal.
Well, I mean, it's the same as any business, really, right? Not many people are fully funded right from the start. They have to go through cycles, and but these guys now that Dan and his team have established and proven that they can set up, implement and operate a successful mine. Yanfalila is a classic example of that. Is an example of that. So there's no real reason why they can't do that with Bruce, which I'm sure they will do. And then Doobie onwards, who knows what's going to happen with these guys? It could go a long way. And it's whatever it is, 9 pence a share or something at the moment. I think it is. It's I think a great opportunity. I really do.
Yeah, I think
not advice, obviously.
Yeah, the other thing that you probably don't get when you watch an interview is that because obviously one speaks to these individuals beforehand and afterwards and everything else. I mean, the amount of work and effort. I mean, they are these people are killing themselves. And that's the thing. There are some companies where you interview them and it's like you can't tell whether they're on holiday or whether they're actually doing anything at all. But that one is there's no slouching at all in that. They're spinning many plates. They're doing a lot of work. It's not easy. And I think it's a bit of the British lack of appreciation of people who actually do some work as well.
Well, I think did he say 2,000 employees?
Sorry. Yeah.
Did he say 2,000 employees? Right.
Yes. So he's doing a lot of stuff there, and as I said, with the way the taxes are at the moment, you've got to anybody who's actually working very hard, you've got to take your hat off to them. Well, obviously, you can't do that because that's your thing, but you have to do that. So it is something that I do appreciate that from the companies. I think there's another company called Rainbow Rare Earths. I think the guy there is very good indeed, and I think it's George Bennett. Can't quite remember his name, but I've interviewed that company quite a few times, and they do stand out on a personal basis as well. That this guy knows what he's talking about. He's keen, he's knowledgeable, etc., etc. And I think that is something that, it's something difficult to put your finger on when you're sort of trying to invest in a company. And I think that aspect of sort of trying to understand and know the management is very important, and that's something that you should meet them, etc., etc. And that's why this is a privileged position to be able to speak and follow companies and know the people involved. Probably one. In a way, if I had just even 10K with all the companies I thought were really hot or were really mispriced, I think that would make a lot of money. It's that kind of thing. Because you'd have 10 baggers in there, you'd have companies which are.
I think it's an interesting debate, and it's wider than Hum. I think the more and more I get an understanding of some of these small caps, and I'm still relatively new to that world in the scheme of things. I think the leadership of these companies, the CEOs that drive these companies, and more importantly, how not only experienced but how independent they are compared to potentially some of the major shareholders and so on, I think is a critical decision factor when it comes down to investment and the potential success of those companies. And as you know yourself, and in fact, I think you've expressed this to me a number of times, there is such a wide scale between the one side and the other side, shall we say? And I think for any investor out there, or any potentially new investor out there, I think what you've just said are very good words of wisdom. Trying to understand, trying to get to know, try and have a conversation if you can, or watch interviews with potential CEOs of companies you're thinking about investing in, because that's the person who's going to make or break the cash that you have, right?
Yeah, I also speak to people who've been in the market for a long time. So one of my mates is somebody I've known since basically since 1990 or the late 80s, and he's 72 now or something like that. And you can say to him, okay, what do you think of this company? What do you think of that company? Or he'll give advice, which is, sort of one company said, well, if the shares are that low, well, why don't they just do a share buyback? Just things like that, just a share buyback, which I think obviously these days a lot of companies don't do that because they're skint. But if they do have money, that is a very, apart from director buying as well, which is obviously a signal as well. I think First Class Metals, I think there was a placing announced today, and 600 grand raised and everything else, and the directors are in there, and you've got to say, well, I might not like the placing, or I think there's another one, whatever it is, or don't know the price, but they put the money in there, and that is very, very important. So them being significant shareholders, adding to their position, all that sort of stuff. Those are all the green flags, and I think even in this market, that kind of thing is something you should look for and appreciate. And if there is a turn, if there is ever a turn in the market, which at the moment doesn't feel like there will be a proper one, then they'll be the first out of the starting gate.
I think another thing is not only them investing in themselves, which I think is exceedingly important and more important than what I'm about to say. But another example is when you see some of the management being incentivized or being given options or given shares, if you like, in the company, but they're doing it through a performance-based incentive. I think. Is it Future Metals? I think was looking at the other day. There was an RNS recently, maybe yesterday, and the new chairman there has been given quite a detailed list of performance targets to achieve for his options to mature. And you do get examples, and there's a number of them where you actually see RNSs, and the guy has just been given shares because he turned up in the morning, right? That's not exactly a motivation. So I think another thing to look at again for potentially new investors out there or new people in this area is look out for those sort of performance-based targets, because that's certainly something that's going to drive these people to achieve growth, which is obviously what you're looking at with your own investment.
Yeah, I mean, maybe even a shed load of options or warrants double the current market share price, something like that.
Yeah, so which is what happened in this case.
Yeah, so that would be the thing. So so people know, but obviously if the market's not going up, and it is, I was looking just at some of the rises of the last few weeks, and most of them have sort of doubled back on when where they came from. So it is Eternity Networks was up last week and it's now back to half the peak, and you just see that again and again. I mean, nothing, hardly anything goes up and stays up. And in a way, it'd be probably good to come up with a list in one of our talks of stocks which actually have consistently gone up
and stayed up. Yeah.
Stayed up, and
stayed up for more than a day.
Yes, and I think McBride is one of them, and it's one of those that it hardly ever appears in my bulletin board heroes because it's only up 1 or 2% now and again, but over the year it's up 50%. That kind of movement. Yeah. And there are the ones that which they offer the move on a plate, but for a short term 1 week move, but that is obviously very hairy and not really if you get it wrong, then that's you need 2 or 3 good ones to cover one wrong one, that kind of thing. But
yeah.
I wanted to talk to you about your favorite Premier African, because you're obviously the maestro in that area. What's the latest description of what's going on there?
Well, there was the Q&A with Mr. Roach on Monday evening. I think it was 4:00. That's really been the latest communication so far. I did sort of do my analysis on that and release it, but I think as a general overview, I think it came across humble, apologetic, sincere, and I'll accept that. I think he went through a lot of detail about the status of the plant and the production, why it got to where it is now, the status of it as it is today, and what they're trying to achieve in the coming weeks. I think he skirted over the grades of the products and couldn't commit again to an updated resource statement, which, when you bear in mind the last one that was released was 2017, this seems a little bit concerning. And what did concern me, really, to be fair, is that he didn't address or didn't discuss the status of the relationship with CanMax and how they felt about these delays. I think it's the 24th today. I think 25th tomorrow was the deadline, or is the deadline, for the shipments, which obviously isn't going to hit. And after that point in time, CanMax will probably have to make a statement about how they're going to deal with this, and they have a number of options. Now, I know that there's a lot of sensitivity here, so he wouldn't be able to say a great deal. And he did say the relationship between the parties is very good, but there is an element of I think he could have said more. And he actually said nothing whatsoever about finances. It wasn't originally on his list to discuss, and then at the end he just mentioned the word finances and said it's a difficult subject, and then moved on to something else. I actually raised questions to him about them on the back of the Q&A not being answered. I went back with more questions, and they've come back literally just before this discussion, just stating that the financial discussions will have to be a subject of an RNS, which I sort of get, but there's still some. He should at least address the subject to some extent. I think the other concern I have at the moment is that the Q&A session itself, although it was attended, I believe, by 200 people, which is very good, it's not been released yet, and I'm not sure that it's going to be released to those people that didn't get a chance to see it. From what I understand, and I put this sort of inverted commas, that there is a format that is going to be released, but I don't know what that format is, whether it's just a transcription or just maybe a text document with some FAQs, if you like, or whether it's going to be the full video. And I'll be honest with you, I actually recorded the video because I wanted to obviously watch it back and be ready to do a release of it. So if it's not released in its full, I should probably release it myself, because I think it's probably appropriate that shareholders and shareholder potentials have the opportunity to watch back on that if it's not published by the company itself. But overall, nothing massively new. Still a lot of work to do, and it's really going to be December, January, and February before we get real updates. I think the next thing we'll see is some images about the new ball mill, which is the big piece of equipment that's going to be delivered to site sometime in December coming through, and that might get some people stirred up a little bit. But I think he ultimately said that will not be commissioned until probably the second or third week of January, I think was the statement, and then from there's some additional commissioning of parts of the process that need to go through. So again, I said this in my video, I personally think that it's unlikely that we'll see shipments much before the back end of February, and possibly through into Q1. So what that means then for payments to CanMax and so on, we'll have to see. But I certainly would expect to see some other raises as we go through the coming weeks and months.
But isn't that a company situation where, I suppose it's trying to get to where Hummingbird is now, but there's a lot of moving parts, and and one thing goes slightly wrong, and then all the timelines to go into disarray. So it seems to be a complex situation, much more complex than, because I mean, obviously the stock has a massive retail following, and it just seems to be one of those where because of the massive big retail following, it's almost cursed it into delays and things like that. I mean, it's a very attractive prospect. It glitters as all retail situations do, but there's just a lot for the company to do, and just one thing gets slightly out of kilter, and then there's delays and things like that, which is the last thing that retail investors want or need.
Yeah, I mean, I mentioned last week that I mean, personally, from the research I've done and investigation I've done, although there are delays, although there's likely to be more raises, more dilution, so on, ultimately, I still think that there is good product in the ground, and they have a lot of equipment there that will ultimately produce spodumene, and they will make money, and therefore they will be a successful company. I'm still very, very confident that will happen. They've decided to go down, or they did decide to go down a slightly different and unique route of creating the plant, which, as much as some people disagree with this phrase, it's sort of based on trial and error, as opposed to let's do all the crossing of the T's and the dotting of the I's beforehand. And therefore you're going to have ups and downs, right? And I mentioned this last week. I'm sort of less concerned about the operation. Now that will go through ultimately, and it will produce something. I'm just not particularly happy about how it's been communicated, been managed, and I think shareholders to some extent have been taken for granted, and that to me, it goes back to our discussions about scales of CEOs, right?
You say that, but I mean, it's like there's so many things from what you said, but you say that, but it's like I can't think of many companies where that you just say, wow, they seem to be slick, they know what they're doing, they communicate properly. It's either, if they're a good company, they tend to be quiet, so they tend to keep their mouth shut. So let's say Rainbow Rare Earths tends to be relatively quiet. And so, somebody like, Premier African, is more noticeable, even though maybe for many investors, Rainbow may be a more suitable investment. There's too much, there's not that volatility in that company. But overall, I think, the communications from companies, and obviously this is my area, it just seems to be a tick box exercise, not one which, they're really wholeheartedly behind, or obviously in most cases don't understand at all. I mean, it's literally, so we'll have to do an interview on, the cheapest platform we can find, and then we'll do a webinar on another one, and we might get somebody to write about us on a third website, and that's the thing. So the quality of what you read out there and the way it's presented is, it's either just a copy and paste of the RNS, or it's like the 30-page or 50-page gobbledygook from a research note, which doesn't help anybody either. So I think people need to think about it a bit. I've been sort of, I do sort of see or go and meet some, American, Canadian companies, Australian companies, and in the resources space, and because they're in town now and again. And you see that the professionalism there and the quality there and the way they present is so much better, as if they rehearsed it, as if they do it all the time, as they believe it. They know that like 30% or 50% of life as a public company is communication, not 5%. And not just
and that's my point. There's other companies that are listed on AIM. For example, take Serato, or One Disco that it was, right? Okay, it's changed its management. Stephen Kelly is a pretty seasoned and successful campaigner, and he knows how to play the game, right? And he's got a big challenge in terms of communication simply because of what went on with One Disco. But he has a very solid strategy. He's not going public with a lot of communications. He's quite quiet at the moment. When he does put something out, he states that he comes across with a script. He only talks about big deals. He doesn't want to keep issuing every time that they earn a deal for $1,000 or something, because it doesn't affect the needle in any which way. And he's managing it, for me personally, in a very, very professional way. On the other hand, other people that we're talking about a moment ago, I just don't think have grasped the the influence that social media has on companies these days, especially when retail investors have such easy access to trading shares, and that has just been missed, and therefore we've got this exaggeration and this real problem that of image and volatility when it comes down to the share price, because certain things are said that are contradicted the next time, that are contradicted the next time, and that's quite easy to fix, to be fair, and it's just not been done.
Yeah, no, I think there are some, there's still plenty of, I'm trying to think. I think Andrada, I think, is a great company. Arrow Exploration, I think, is a great company. But even those, I think, are great companies with great management. But then they haven't, they're great on the ground and in the ground, but they haven't communicated, they haven't differentiated themselves from let's say the bad boys and girls that we could all talk about. I think the one that stands out in the recent past which disappointed me actually, was Helium One, because I thought that was it in September. I thought, that's it, they're going to find the mother load of helium and it's going to be a party, and it's a retail. I thought it was going to be a retail play where the curse of it being a retail play is not going to kick in, and it has. And they haven't communicated since sort of like, oh, well, there's some gas there. I mean, it's much more than there is just 50 yards down the road, et cetera, et cetera. So that for me was just, the market was thinking, and if you're looking at all the RNSs, the market was thinking like, you're trying to hide something here, or you're trying to make it look better than it is. Just say what it is. So
people don't like, I've been in my life in business, I've seen these smoke and mirrors, whether it be through examples we're talking about here with retail investors and CEOs, or whether it's just internal politics within a company, right? But certainly internal politics when it comes down to talking to customers. The bottom line is that things go wrong, right? Things get broken, it doesn't work, right? But what people don't like are surprises. So if there's bad news, be upfront, talk about the bad news. If there's good news, share the good news, but in the same enthusiasm as you would do the bad news. And if you have bad news, at least when you communicate it, have a solution as well, right? And then people are not concerned so much. There's less impact. Anyway, that's my rant this time.
No, I think you deserve one. It's your turn. But anyway, so we'll sort of once again
running out of time.
Once again, we're running out of time. Anything you want to close on this week?
There was one thing, but I can't remember what it was now. No, we're going to run out of time, so it'll come to mind and we'll save it to next time.
Okay. Well, on that note, Steve Deacon from Biztech Academy, thank you very much, and thank you for not getting me up at the crack of dawn on Saturday when it's actually dark, here at 7 o'clock in the morning, and so bright and breezy. And that's probably why I had the rants before, because I was getting up so early. This is nice.
Narky, yeah.
Yeah, exactly. So there we are. But anyway, thank you very much, and we'll speak next week.
Okay. Have a good week. Bye-bye.